Well, crypto's had a rough year. It was actually having a great year until October 10th, because on October 10th, Bitcoin was up 36% for the year, and now it's currently, I think it's like flat for the year. So it lost a lot of its gains. Uh, I'm still very optimistic, because crypto still has its best years ahead. But crypto should have had a good year this year, and it was on track to until there was a liquidity crisis on October 10th. That was a bigger wipeout in terms of liquidation than any event in history. The most recent one before this would have been 2022 with FTX. And that wipeout pales in comparison to what happened on October 10th. But in 2022, it took 8 weeks before crypto, the smoke cleared, the leverage wipeout was enough in the mirror that crypto prices began to recover. This week is the 8th week since that crisis. And I think crypto prices are beginning to actually recover. That's why I think Bitcoin can double from here by the end of January. Now, many people don't expect it because of the 4-year cycle. And that's going to be the big question. If Bitcoin breaks 125 in January, there is no 4-year cycle.
What did happen on October 10th? Like, everyone knows crypto markets got hit. It seems unclear to people what actually happened. And as you say, it was one of the largest liquidation events that we've seen in the history of crypto. What happened?
I'm going to give you what we've been able to piece together, and I would say that it's like a 90% correct, because there's going to be 10% you don't know if there was something else.
Just to clarify, is the reason we don't know what's happening because of the anonymity of crypto? We don't know who owns which wallets, and so it's harder to track what's actually happening?
Well, it's that, and plus, if when we look at liquidation events like in the stock market, 90% of what someone will explain is probably correct, but 10%, like 90%, it'd be 90% to correct say that the February to April decline was largely due to the Trump tariffs.
Yes.
But the other 10% would be like, well, stocks were already expensive and they were overdue for a correction. So that's what I mean by 90-10.
So give us your 90%. What do you think happened?
On October 10th, there was 2 things that happened. One was a triggering event, which was Trump announced, a re-escalation of tariffs with China, like a tripling of proposed tariffs. And because markets were closed, historically, crypto is what reflects reaction to a macro event when you're already after market hours. Like if the S&P was open, crypto probably wouldn't have got punched as hard. But crypto prices fell. Now, crypto prices falling, system can handle that because, crypto is a hyper volatile by nature. So large swings in prices shouldn't really overload the system. And even volume shouldn't overload the system because crypto trades, there's so much automated trading. However, there was an algorithm in place that actually what I call a glitch happened on a specific exchange, okay? Many people use leverage in crypto. I mean, it attracts leverage trading, but people put up collateral so they can do leverage trading. One of the collaterals is stablecoins, okay? And stablecoins are pretty safe collateral because, hey, if it's Tether, it trades at $1, it's pretty safe collateral. And so you can borrow a lot against safe collateral. And if it was USDC, Circle, that's also a really stable coin because it's backed by $1. However, there was a popular stablecoin called USDA. It was an algorithmic stablecoin, okay?
Okay.
And on one particular exchange, because of the shock of Friday, internal prices, like people bid ask of that stablecoin actually got out of whack. Suddenly, the price went to 65 cents, even though it's supposed to be essentially worth $1. So, but within one exchange, that the quoted price dropped to 65 cents. Well, that meant that all the collateral for every account that used that particular stablecoin to borrow money was now in deficit. Okay, even if it was just $1 that traded at that price, it was already putting every single piece of collateral at risk, into deficit. So then something called ADL was triggered, automatic deleveraging. And so in one exchange, everybody who would use that stablecoin as collateral basically got wiped, their accounts liquidated. Well, what were those accounts long? They were long altcoins and all these different cryptos that suddenly got dumped onto spot exchanges. So then on all these other exchanges, suddenly some altcoins suddenly went down 99% because there was a lot of selling from ADL, but it triggered a domino effect of all these other exchanges triggering other ADLs because spot prices of all these alts dropped. So that to me was a glitch because it was like an illiquid quote that didn't represent a true VWAP triggered an ADL that triggered a cascade of ADLs. And that led to millions of accounts being literally zeroed out. It won't happen again, I'm sure, because in the future, I'm sure they will use a composite set of prices, or if there's a variance between what's quoted internally versus on spot, or if it's a volume-based measure. So that's why I don't think it would happen again, but that's what happened on October 10th.
Okay, we finally got our answer. I've asked this question to many people, and I never get a proper answer. My takeaways from that are that, it seems vulnerable. This asset class that is, supposed to be a hedge in a lot of ways, we are learning in various ways is extremely vulnerable to what seems to be almost nonsensical mechanical glitches, which I guess that is my takeaway.
In 2020, the price of oil went negative, right? I mean, oil is the most liquid commodity in the world, and it traded at a negative price. So these glitches happen in all markets, but it does happen in crypto because it's a gigantic place where people are trying to experiment and create, what they view as free from censorship and interference. But of course, every event's going to bring something new, and you're 100% right. It's terrible that it happened. But again, I remembered oil was negative, and people actually were able to buy negative oil. They were paid to take oil.
I guess I'll wait for a negative stock price.
I'd love the opportunity to get negative stock. Remember bonds? Corporate bonds had a negative yield in Europe. You were actually paid to own, an issuer was paid to issue a bond.
Can you identify any sectors or geographies that you think are dramatically over or undervalued right now?
Undervalued, I think, is small caps, because there is real earnings growth now coming, but there is no money flows. So small caps are a whole group that professional investors can afford to ignore because no one else is buying them. The amount of active money in small caps is at record lows. I think financials are also dramatically undervalued, Scott, because, well, this is where we could be wrong, but in my view, I think the financial sector is actually becoming a tech sector, that as money is becoming more digital and as AI implementations are heavily taking place in financial services, it's going to make it's creating an advantage for the companies who issue capital. And in companies like JP Morgan, probably, as we just discussed earlier, could really dramatically reduce their dependence on humans, which is their largest expense. So I think financial companies are increasingly going to look like tech companies, and their multiples may become more like tech multiples. So that to me is one group that in the future could have a 30 PE, even though they used to trade at 10 times earnings.
So we talk with a lot of people. Most of them are somewhat bearish right now. You are one of the only real bulls that we've talked with. I've seen you described online as a perma-bull. That was what Bloomberg called you. What do you think about that label? And how is it that you are bullish right now in a sea of bears? And what do you think that says about who you are?
I was first called a permabull in 2009. And in fact, it was major newspapers that were using it as a mocking term. Here's what's interesting. 16 years later, what was the right call to be?
Now the optimists have won.
And yet today, if I had to say what proportion of investors are bullish versus bearish, it's really risen in the last year. In fact, it's kind of close to the 2009 levels. I think people are already betting on the fact that we're in a bear market. And now many people were convinced of that in 2022 because of the Fed hikes, and they just never changed their views 3 years later. But as you know, what made people a lot more bearish is also because President Trump is a very unpopular president. He's a very divisive figure. I'm a registered independent, so I have never tried to let politics be involved in how I view markets, but I can't help notice that I think that political lens plays into many of our clients' views around markets, that they tend to view. When Biden was president, there were a lot of people who were critical of Biden. I thought the economy, I've cared about the economy. I thought the economy was fine. I think the economy's still doing fine under Trump. So that's kept me, I use that as one level of coding that I think has kept people bearish. But, I think America is, as long as it's a place of innovation, and we are because we're at the center of AI, I think it's pretty bullish. But you guys have raised the key point. I mean, there's a chance that this AI is a disaster for labor markets. And if it is, the U.S. will be the least scathed, but everyone's going to go down.